Good morning, Twin Cities. Welcome to Reckoning with Real Estate, a show about the American dream and building a better real estate company. I'm Paige Kale with the Real Estate Collaborative, and we are joined in studio today with Ben Feldman from Active Insurance Solutions, and we're going to talk about all things insurance, mostly focusing on homeowners insurance. But I know, Ben, you sell all of it. So why don't you start us off and give us a little introduction of yourself?
Sounds good. Well, thanks for having me on. As I just mentioned, pre-recording first ever podcast. So we'll do our best here today, but appreciate having me on and excited to be here. So yeah, my name is Ben Feldman. I'm one of the partners and owners of Active Insurance Solutions. We're based out of Chanhassen. We have a team of 6, and let's see here, going on 8 or 9 years as an agency owner and producer. We do home, auto, life, small business insurance, and work with a ton of first-time home buyers, and also work with a ton of people upgrading to their dream home as well. So excited to be here to talk a little bit about home insurance and how that impacts a home buyer and everything like that, and excited to be a resource. So appreciate you having me here.
Yeah, great. So glad that you are here. And I know as a realtor and broker, I know kind of the basics about homeowners insurance. So I'm excited to kind of dive deep. So let's start off with a little icebreaker question. So in one word, how would you explain your morning today?
Oh man, one word.
Or 2 or 3. I don't know. A whole sentence works too.
Survival. I would say survival. Can I expand on why I use the word survival?
Yes, please do. That sounds dire.
I have a 5 and a 2-year-old, and my daughter started kindergarten this week. Yes, still this week. Days blend together, but she's now going to a bus, and she's separate from my son Owen, who is 2, and he still goes to different daycare. So our mornings are now split delivery, where we're both involved. So have a very strict time schedule now with the bus pickup. So got my daughter organizing out of the house. My wife helped with that. And then my son was, I think he's teething, but he's been in our bed the last 2 nights, unfortunately. So been a little cranky in the mornings, not sleeping as well. So he was a little fussy getting changed, but we got him out, stopped at Caribou. He gets us half a kid smoothie. So we did that. And then I'm a big fan of like the turkey bacon mini and Caribou coffee in general. So he likes the turkey bacon in those. So cheered him up with that, and we got him to school, and I was in my desk around a little later than normal, but sometimes that's how it goes with kids. But yeah, so survival, I'd say we survived. Survived would maybe be the word of describe my morning.
Yeah. No, I remember it well. My kids are older now. They're 21 and 22, and they're living on their own. But I remember that age, and it was just like, I mean, some days it was smooth and some days it was just not so pretty.
But we're here, and I got coffee. That's all that matters.
Yeah, good. Well, I would describe my morning. How would I describe my morning? I like a fire hose. It just has felt like I've had 3 days in one so far. But happy to be here with you. And I should also say that Active Insurance Solutions is one of our sponsors. So thank you for that. And we've worked with you for, I think, a couple years now. And I know, some of our clients have even like gotten new homeowners insurance for their existing homes from you, have kind of checked in with you. And I know I'm thinking of one person in particular, one family in particular that we just actually put their house on the market this morning. But I know you saved them a lot of money, and I think they got better coverage in addition. So it was kind of a win-win. Anyway, that was great. So let's start off with a question, and then we'll see where it goes from there. What factors impact someone's home insurance premium?
Yeah, so this is something that as people go through the home buying process, obviously, and obviously Matt, who's also involved in the podcast here, work with Matt a little bit. And, lenders do their best job to help estimate as a part of your mortgage payment. How much is going to be taxes is pretty easy to estimate, that number, but home insurance is a little bit more difficult to pin down on what, how much of your monthly mortgage payment is going to be to cover home insurance. So, lenders do their best job to estimate. Unfortunately, they have some of the info or can have some of it, but not all of it. And so, some of the main things that maybe are more difficult to pinpoint from a lender's perspective when they're giving you that estimated, $200 a month or $150 a month of coverage.
Mm-hmm.
One of the things they do know, I'll start there, is like your insurance score, which is a kind of a soft credit check. Like insurance score and credit can have a role in your home insurance premium. And so your lender can maybe know that. So depending on where you fall on that kind of spectrum, that's a small factor with a lot of carriers is your insurance score, which is a combination of a lot of things, but credit does have a play. It's not
Oh, that's interesting. I didn't
Yeah.
realize that the credit score impacted your insurance. I guess that makes sense.
Yeah.
They're going to look at as much financial information on you as they can get.
Yeah.
Okay.
And I always get the question, is it a hard? It's like, no, there's no hard credit checks or anything with home insurance. So if you're shopping around, auto insurance never impacts it. Insurance department, they have access to like a reporting bureau that gives them an indication on that. And so an insurance score can reference that, but there's no sort of risk or concern of like a credit pull when you're shopping around for,
that's good to know.
property and casualty insurance. So no issues there. The size of home and the value of the home, obviously, the more expensive the reconstruction of your house, the higher the premiums will be. One of the things that people tend to not differentiate it is the purchase price of the home and the coverage amount you need on your home. So one thing that your purchase price includes is land value, and land value doesn't require insurance, right? So I give the example oftentimes like the amount of coverage you need for a smaller property in Edina, right? Like in, sweet spot in Edina, and it's a tiny home and the reconstruction of it wouldn't be a whole lot, but the purchase price is extremely high because the land is so valuable right there. So your small lot might be extremely valuable. So you might be paying, $850,000 for this property, but the reconstruction of that dwelling might only be $500,000 if it's a small property on a lot. So you might see, sometimes your home insurance isn't going to be impacted by the land value necessarily. It's going to be based on what it's going to cost to reconstruct. And so that's sometimes one thing that has to be clarified with home buyers of like, well, why am I only insuring my house on my policy for $400,000 or $500,000 if I paid $800,000 or $900,000?
And I imagine it could go the other way too,
Correct.
where somebody buys a $300,000 house, and with construction costs the way they are and continuing to rise, the replacement value might be higher than that.
Yep. Yeah, exactly. That's like, that can even be the case for like really large properties that are a little bit older. The market value might be lower depending on location and things like that. So yeah, you're right. A lot of times you're insuring for well more than the purchase price, because if you had a total loss fire, it would cost far more than what you bought it to make you whole. And making you whole in home insurance is replacement of your home, same spec and finish. So yeah, you're absolutely right. It can go either way, and sometimes that's confusing. But yeah, the dwelling coverage or the reconstruction cost is a big factor there. Location, where you live, if you're in the metro or outstate, can have an impact on your rate. How far you are from a fire station, not as relevant if you're in the metro, because most people are pretty close to a non-volunteer fire station. But in outstate, if you're more than 10 miles away from a responding fire department, that can really impact your rates.
Going back, I just want to pause here for a minute and going back to the replacement value. As you were talking, I was thinking about old historic homes. And, we work a lot in St. Paul and Minneapolis. So we sell, help people buy and sell historic homes with the, old woodwork that you just can't even find anymore. I don't think they even really make it anymore. How do you value a home like that in terms of its replacement value?
Yeah. So, some carriers require what they call functional replacement costs. So if you have a home with plaster walls, for example, if you're really looking at a super high value home, like that's, Victorian, like you're talking about finishes, you want to make sure that the reconstruction value reflects the nature of what you're hoping to replace. But some carriers do put like and that's working with your agent to understand the terms of your policy. But like a lot of carriers for a property like reconstruction under $1 million, if it's an old property, they'll have like functional replacement cost on there, which means in the event of a loss, they're going to use drywall, not plaster, to reconstruct the home. And so you have to decide, do you want to be reflecting like the vintage finishes and reflect that in your policy, or are you okay with functional replacement costs? a lot of first-time home buyers, they're buying an older property. For the most part, they're going to be comfortable and understand balance of premium and what they're insuring, that if they had a total loss, they would be accepting. A lot of them would be accepting of using drywall instead of plaster. But if you're very particular and you want to make sure that you're replacing it accordingly, or if it's more of a high value home, on the hill in St. Paul, right? And you want to make sure the policy that you have will replace it accordingly to the specs and whatnot. So working with your agent, you can make sure you're securing a policy in a policy form that is going to reconstruct the home that you're expecting at the time of loss.
Mm-hmm. And as far as that replacement value, do you have like a system, like an app or whatever that you go in? And I'm just curious how that all works. And this is maybe too much detail for folks, but
when you're an agent and you do those calculations all the time, there is like industry standard tools, a couple different ones that most providers use. But you can, as an agent now, I'm not a realtor or not whatnot, but I look at enough properties where I'm like, oh, what's the reconstruction or cost of this one? It's like you can get within, pretty close number, but every agent's going to calculate that differently. And the important thing is, like, if you're working with an insurance agent, are they being diligent in how they're calculating that reconstruction value? Because at the time in the event of a total loss, which we've unfortunately been through with a couple of our clients, you want to make sure the number that's on the paper is going to be enough to rebuild the house. And if it's not, that's where things can get problematic. So working with an agent who's going to be using the MLS listing or the archived MLS listing to calculate, the square footage, the bathroom count, we go through all of that for our clients. And a lot of it's behind the scenes, but making sure that the inputs you put into that calculator are accurate. And that's ultimately how we get the replacement cost or dwelling coverage for the policy. So really has to do with agent input. And then, the carriers, if they go out and inspect the home, on new business and look at the property, if they think the agent did a poor job, they'll send a memo and say, hey, we think it should be higher or lower, et cetera.
One thing before we go to break that I was going to mention too, and this is just the broader kind of housing finance picture, but PITI, principal, interest, taxes and insurance, PITI, that's what makes up most people's, monthly mortgage payment, and that taxes and insurance part is escrowed, generally speaking, with their lender. And the taxes and insurance are the ones that go up year after year. Principal and interest is going to stay the same throughout the 30 years or 15 years of the mortgage, whatever the case may be. So PITI, PITI, I think is a good acronym
I've never heard that. I like that.
Oh, yeah, good. Yeah, I think it's a good acronym for people to keep in mind. But we're going to go to a quick break, and then we will be back with Ben Feldman from Active Insurance Solutions. And I'm Paige Kale with Reckoning with Real Estate, and we will see you on the other side. Welcome back to Reckoning with Real Estate, a show about the American dream and building a better real estate company. I'm Paige Kale. I'm with the Real Estate Collaborative. You can find us at therecolab.com, THERE as in real estate, and collab, short for collaborative.com. We are here with Ben Feldman with Active Insurance Solutions. And before the break, we were talking about PITI, not the kind of sad thing that is normally associated with PITI, but it's PITI. It's an acronym that stands for Principal, Interest, Taxes, and Insurance, and it's what makes up your mortgage payment each month. We were talking about the principal and interest. That stays the same over the life of your loan. Taxes and insurance are the things that go up generally year over year, which is why you do see an increase in your mortgage payment each year. And during the break, Ben and I were talking about what kind of goes into an insurance premium and how they estimate or how they figure out what that is, and also how your lender estimates it and how it can be really tricky to estimate. So I think, do you want to talk about that?
Yeah. I mean, we talked about some of the things like size of home, location, that that play a role. And some of those things your lender does know, and they might get good at putting a placeholder number based on the size of home. And maybe they even know how the roof is, and that can be a factor as well, like the new roof versus old roof and how much premium you get charged. Some of the things they don't know that I just want to mention that are important to note. So if you're in this situation, you might, the number they give you could be low, for example, would be if you have claims history, right? You bought a prior home, or you had a theft claim, or you had a water loss claim in the last 5 years. Those things or fire claims can have a very high impact on future insurance premiums you get. And even if they're at prior properties, so just like your driving history report, or if you have a speeding ticket or something like that, or an auto claim, your loss history under your name gets reported to like a central bureau. And so if you have a water loss at a property 3 years ago in Colorado, and you're moving to Minnesota and buying a property here, that claims history follows you when you're getting insurance quotes. So I typically say a water loss in the 3 to 5 year window at a prior property or at your same home. When you're getting insurance, your rates are going to be 30 to 50% higher just because of that water loss.
Wow. I've always thought it, and I know this is across insurance industry. It's not just for homeowners insurance or car insurance. It's all the insurances. When you make a claim, your premium goes up. Seems kind of crazy to me personally, because that's what insurance is for. Now I get there has to be profitability and all of that, but I don't know if you could speak to that.
Yeah, I mean, unfortunately, loss history and likelihood of future loss, it's all actuaries, and these carriers, they have actuarial teams, and they look at the loss data, and how they rate and how they surcharge is all based on stats and math, right? And actuary and probabilities. So while it seems counterintuitive, at the same time, they classify and identify risks based on all these things and loss history. People who make claims or have a claim, unfortunately, although it feels like it wasn't your fault, or a deer ran out in front of the road, or you had a water loss at your property, statistically speaking, losses mean more likely to have future losses, and they have the data to back it up. And so that's the rating when you have water theft. Wind and hailstorms, a little bit less of an impact for sure. But the water theft, fire losses are very volatile, in that they do have a pretty notable increase or impact on your rates through 5 years. And usually that's when things fall off. After 5 years, it's off your record and won't impact your rates. But it is something that unfortunately is one of the things that really can have an impact. And unfortunately, your lender or whoever you're working with to get an estimated mortgage payment, going through the process, working with a realtor, they might not know that you had that claim. So understand, if you're in that situation, people would probably know. But that's one big factor that can increase your monthly, portion for home insurance.
And I thought it was interesting too, during break, you were talking about when people get estimates, they talk to different lenders to get kind of compare apples to apples, see what the best deal is they can get. That estimate for insurance, which this totally makes sense, is going to vary from lender to lender. So it's important to really look at that number. Like taxes, we know what the taxes are, but for insurance, that's kind of a funny, hard number for lenders to estimate. So if you're buying a house and you're comparing lenders, I think, people should always be looking at that insurance estimate and maybe asking questions about it.
Absolutely. Yeah. We often have lenders ask us like, hey, does this seem reasonable? And, some people are trying to qualify too, so sometimes getting their home insurance premium for closing in a spot that is needed for qualification, we run into that a lot, trying to, maybe they have to take a slightly higher deductible for closing to hit the debt to income ratio and things.
So I suppose, and I guess I've never been like that behind the scenes that closely, but that's okay. That's interesting too.
And that's one of the benefits, as an independent agency working with 20 different providers. In general, an independent agency is going to have more products and offerings and things. And so when you're having to, you're trying to hit certain premium levels for closing, or you want higher deductibles, or you do have a loss history, some carriers are okay with that. And other carriers right now in Minnesota will say, hey, you have any loss in the 5 year window, you're not eligible to be placed with our company. So, that kind of ties into the challenges of Minnesota home insurance and profitability, which maybe we'll talk about in a future episode. But it is challenging. And again, your lender won't have visibility to that. A couple of other things that I was going to mention, like what deductible you select can have a big impact on that number.
What are the deductible ranges, out of curiosity?
So it's changing and going up in Minnesota just with the frequency of hailstorms and profitability challenges. But right now it'd be pretty rare for a home buyer to have, $1,000 deductible still exists, but it's becoming very rare on home insurance
because it's so expensive.
Yeah, or carriers are requiring 1% of your dwelling coverage. So if your dwelling coverage is going to be 600,000 reconstruction for your house, you would be required to carry a $6,000 deductible on your policy minimum.
Wow.
And so some carriers are requiring like $5,000 minimum. But for a first time home buyer in Minnesota, you probably will see 2,500 or 5,000 as an option for deductible. Just depends on the company. Some might require you to carry higher for just wind and hail storm deductibles. So because that's where they're struggling right now is windstorm and hail, specifically in Minnesota. But it depends on a range, and going with 2,500 versus 10,000, that could be thousands of dollars of difference per year on your policy. So your lender might, if you're very accepting of having some out-of-pocket risk and self-insuring with a higher deductible, the number the lender puts on paper might be too high because you're like, well, I'm okay taking a $10,000 deductible. I'll put money away and self-insure a little bit.
Yeah. I'm glad you said put money away, because I was thinking as you were talking, when we work with clients, with buyers, specifically first-time home buyers, we encourage them to have, kind of a separate house account where they're putting $200-$300 away each month for repairs and anything big that comes up. And I don't know that I've ever thought about the insurance deductible, that if something catastrophic, God forbid, happens to their house, a water event or hail damage or whatever, that if their deductible is, like you said, $10,000 because they wanted to keep their premium low, that's a big chunk of change that folks need to kind of keep in mind as they are, living in their home. So I'm glad you mentioned that.
One of the things with kind of the rising deductibles that we just recently started off at our agency, which is you see this in health insurance where you have high deductible health insurance plans, and people might be able to secure like group accident policies through their employer, where like if you're hospitalized, we'll give you a $3,000 reimbursement, which you can put towards your health insurance deductible or things. So in insurance now, there's products and offerings where if you have to take a $10,000 or $5,000 deductible with your insurance carrier, there's products where in the event of a loss, you can actually get reimbursed a portion of your deductible. So like the product that we offer at our agency, it's a couple $100 a year, and you buy it. And if you have a home loss, it pays out $2,500 cash to help you fund your deductible. So that's kind of a new development.
So that's like a benefit that companies can offer to their employees?
Correct.
Oh,
okay. Or sorry, it's a benefit we can offer to our insurance clients now. We can sell and offer to say, hey, you have to take a $5,000 deductible with Travelers because they require it. But if you're not comfortable with that, we have this product for $200 a year where if you buy that, it'll pay up to $2,500 towards your loss if you have one. So
which is kind of a good way to do it, I would think, because then you don't have to make sure that $2,500 is sitting somewhere in a bank account. It's more like, what is that? Like it's $18 a month or something that it would increase.
So there are some options there now. And like I said, there is some of that group acts, like in health insurance, they have it. Or like the home warranty appliance repair plans, you can pay a monthly or annual amount. And if your refrigerator goes out, you get a stipend to replace it. Yeah. Similar thing where like, hey, you have a deductible on your home insurance. If you have a loss, you can buy this accident policy essentially for your home that will pay out cash for your deductible because, et cetera. So new product kind of coming into the landscape that we've now been able to offer, but with rising deductible requirements because of profitability challenges, people might be looking for a way to either self-insure a little bit more, make a savings account, or maybe look for a product like that that you can buy to supplement and help cover that high deductible.
Yeah, that makes a lot of sense. So we have a couple minutes left. And before we run out of time, why don't you let people know where they can find you if they want more information?
Yes. So we, like I said, we're based out of Chanhassen, but most of our interactions with our clients are phone, email, text. I like to think we're a pretty tech forward agency. So our website is AIsolutionsmn.com. You can also call us as well. Our team can call us 952-479-5877. And we're on social a little bit, not overly active there. We're on Instagram,
here.
AI Solutions MN, but you can Active Insurance Solutions. You can Google us as well. Find us on Google, and we'd be happy to help. So
great.
Home insurance is a little bit crazy, and even if with questions, whether you're a client of ours or not, you have questions or whatnot, don't hesitate to give us a call. Happy to provide some guidance and advice, and would love to be a resource for a future home purchase.
Great. And I can attest that Ben and his team, they respond very quickly, which I always appreciate as a realtor. It's, real estate is super timely. So you're very responsive. You're very good at explaining things to folks. And that's a huge asset. So just what we talked about, let's just do a quick little recap. So we talked about homeowners insurance and kind of what goes into the pricing of it. PITI, principal, interest, taxes, insurance, what makes up your mortgage, the taxes and insurance are the things that go up year over year. And anything else that I missed?
Yeah, home insurance is a little crazy. It's important to have someone to help you answer some of these questions. So your realtor is probably enabled in some ways to do some of that. But at the end of the day, if you have questions on what that home purchase insurance is going to be, good to get connected with an agent sooner than later. So appreciate you having me on, and
it was nice
discussion about insurance.
It was way more interesting than I thought it was going to be, Ben. And we'll see you again soon.